If you have got money sitting in your checking account right now, there's a number the IRS cares about, and most banks won't tell you until it's too late. It's not a tax, it's not a fine, it's trigger. Cross it, and your bank is legally required to report you to federal government. No warning, no phone call. Today I'm backing down exactly what that number is, why it exists, and the three simple mistakes that get everyday people flagged without doing any wrong thing wrong. Before we go further, I want to be upfront with you. This is not some secret 2026 IRS crackdown that just dropped. This tool has actually been on the books for over 50 years, but it's getting attention right now because more people are moving large sums, inheritance, home sales, retirement, rollovers, and getting blindsided by reports they did not know were coming. So let's fix that. What the rule actually is. Here the plan. Under the Bank Secretary Act, a law passed in 1970 and expanded by the Patriot Act in 2002, any bank or credit union has to report to the federal government any cash transaction of 10,000 US dollars or more that include deposit and withdrawals. It also covers cash equivalents like cashier check, money order, and traveler's check under 10,000 US dollars when they are used to structure a bigger transaction. This is called a currency transaction report or CTR. Your bank fills it out. You don't have to do anything. It does not mean you are in trouble. It just means the transaction now exists in a federal database that the IRS and other agency can access. The everyone gets wrong. Here, where most people panic for no reason and where the truly sneaky mistake happen. First, this rule is about cash. If you have deposit a 15,000 US dollars paycheck, bill, direct deposit, or transfer 50,000 US dollars from one bank account to another electronically, that's not a cash transaction under this rule. It's tracked differently, but it's not the same CTR trigger. Second, and this is the one that gets people in real legal trouble, is something called structuring. That's when someone deposits say 9,000 US dollars today and 9,500 US dollars tomorrow, thinking they are staying under the radar. The law explicitly bans this. If a bank see a pattern of deposit designed to stay just under 10,000 US dollars, they can report it's a suspicious even if the total is legal. Even if the money is completely legitimate, structuring itself is a federal crime separate from whatever the money was for. Who this actually affects? So, who actually runs into this in real life? Three groups most often: people who just sold a home or inherited money and are you moving large cash equipment sum. Second is small business owners who take in cash, landlords collecting rent, contractors, restaurant owners. If you are in business and receive more than 10,000 US dollars in cash, you are personally may need to file Form 8300, not just the bank. Third, retiree moving retirement funds or large sums between accounts, especially if they are doing it via cashier check or in-person transaction at a branch. None of these means you are a target. The IRS say plainly most star transactions are completely legitimate and reporting is automatic, not a red flag on its own. What this is not. Let's kill a few myths going around. This is not a limit on how much money you are allowed to keep in your checking account. You can have 2,000 US dollars or 2 million US dollars sitting there. There's no cap. This is not the same as FDIC insurance limit, which protect up to 250k US dollars per depositor. Per bank, that's totally separate topic. This is not a new rule for 2026. The 10,000 US dollars threshold has stayed the same since it was set decades ago and has not been adjusted for inflation. What to actually do? If you know you have got a large cash transaction coming up, an inheritance, a home sale, a big cash gift, here the move. Just tell your bank ahead of time. Bring documentation it from a legitimate source like a scale contract or an in-state document. Being upfront actually speed up the process and avoid extra security. And whatever you do, don't try to break the deposit into smaller chunks to avoid the report. That's the one thing that turns a normal transaction into a federal investigation. So no, the IRS did not quickly change anything this year, but if you did not know this rule existed, now you do, and that put you ahead of 90% of people who find out the hard way. If this help, hit subscribe. I break down the finance rules banks assume you already know every week, and drop a comment. Have you ever had a depositor flag? I want to hear your story. Bye bye.